Hello traders, this is Dan and this is our weekend review of open and closed positions in the weekly options trader for the week ending May 3rd. Well, I got to start with just a huge congratulations to all our traders who have been enjoying and profiting over the past couple of weeks on all of our trade recommendations. I would say this is actually a record we're setting here over the last week, and we'll go through them all. We had 11 for 11 winning trades. And now, over the last 5 weeks, every single trade, they're all open and closed trades are available for our members in the members area in an open and closed spreadsheet. We have now closed, which include a couple break-evens, 46 out of 48 trades. That is a success ratio of 96%. That is statistically impossible if you don't have an objective high probability approach, like we use trading options with Master Trader Strategies. And it's just incomprehensible to me that some people believe that technical analysis doesn't work, that picking chart direction is merely a 50-50 coin flip. These results should be just an amazing wake-up call to those that believe that. If they would use the Master Trader method in multiple time frames chart analysis, regardless of what type of trader you are. If you're quantitative, fundamental, just looking at option Greeks, putting the bias of the chart will increase your results tenfold. Okay, let's continue. Here are the spiders. We look at it in every video. Still in an uptrend, red bars ignored. Weekly chart is at closed at a new weekly high, and we've been saying we're still going to continue to trade on the bullish side until we see what we've been calling like chinks in the armor, so to speak, because we do have some overbought markets and market internals. We got that chink in the armor on Wednesday when we had a bullish gap up, bearish engulfing, there was follow through to the downside, but then it closed with a bottoming tail, and now Friday it gapped up, bottoming tail, buyer stepped up, green, so it closed over the open, and it's deep into this bar. So again, we're going to trade the charts as we see them, but we still have that 1 foot out the door when we see more signs of these chinks in the armor. BABA is actually our only open position now. This was a breakout that we entered on Wednesday, and it's a bullish breakout daily, weekly. We sold a put spread for next week, and we covered half at 70% of max value already, and we're just going to go into trail stop mode. Open positions now. Amazon was the one that people loved on Friday. That was a bullish gap up on whatever the news is, Warren Buffett, Cuban, whatever. We don't even care about the news. Then we waited for our intraday entry. We sold a far out of the money put spread that expired in just a couple hours. We closed half at 67% of max gain in 1 hour. And then we said you could bid a nickel for the back half or just let it expire worthless, which it obviously did. I mean, our short put strike was 1932, spot 50. And that was way under the day's low at the time. So again, that's one of our specialties, is selling options and spreads on expiration day. So Friday is one of our favorites. And with the spiders, SPY, ETF, they have multiple expirations during the week, which we love. Other trades here, let's go through them all. QCOM, we shorted a put spread. Because on Thursday on the earnings breakout trade, and because of the topping tail on an intraday rally, even though it had a very nice close, we just said, you know what, it's like a dog who that topping tail was a bite, and I don't like dealing with uncertainty, so we just closed it out at a small gain. UVXY, when we got that chink in the armor, was breaking out. It was a bullish engulfing bar. We could have closed half of it, 50% of max profit on the rally on the UVXY, which is the volatility ETF, and we trade these in conjunction with the spiders bearish pattern, of course. Then it had a gap down on Friday, and we just moved our stop to break even, and it stopped us out break even. Netflix, we had 2 put spreads during the week, and this looks fantastic. fantastic. I'm going to put another one of these in for next week. So we had 2 of them. They were both great. I'm not going to go into the details. UNH, we had a bear call credit spread on this bear 1, 2, 3, and we closed it out into weakness. Well, actually, because of the deep retracement, I tightened the stop to an intraday pivot, and that allowed us to stop out at a gain. Apple, we had a put spread on the bullish gap up on earnings day, and we actually closed it out in the same day of the trade profitably in the 2 different lots. Marriott, we had a put spread right over here, and then on the gap up day and the rally, we closed into strength. Looks great, and that looks higher too. We'll have to check that out for another play. CGC, we had a put spread on this breakout right here, this bullish 1, 2, 3, and we just trail stopped out at a profit. And finally, Texan, we had a put spread on this breakout bar. And folks, this is one of my favorite sayings, which only occurs in selling put spreads because of time decay and volatility contraction. That's how we make our money, in addition to being on the right side of the directional component. Meaning, when we sell put spreads, if the stock goes up, the delta gets smaller, and then we make money that way also. But this stock went against us, and we still trail stopped out at a gain. That's one of my favorite sayings. Stock went against me, and I made money. That does not exist in trading stocks alone. So that's it. I'm sure we'll find some more great setups. Keep up the good work, everybody. Thanks for all the wonderful emails and testimonials that we've been receiving. Good trading, everyone. And actually, if you'd like a copy of the article I wrote on selling options on expiration day, you can see the link below to get that article. Have a great week, everyone. Good trading, and see you next time.